We are in the Sankalpa series for BFM and we are solving important theory as well as objective questions as well as numericals for the same. So today we'll be solving one numerical for BFM. Numerical means it's a 5 marks case study and this case study definitely occurs in the exam. I would always suggest follow the complete series. In complete series, we are solving all the important numericals, theory, as well as the objective questions. Okay, so let's start. See this. Numerical is a big one. It will take a long time as such because there are certain concepts which need to be explained over here. So let's start. On 3/10/2009, your exporter comes. Your exporter customer tenders an export bill for USD 5 lakh. Drawn 120 days from the date of shipment. What is the shipment date given? 3/10/2009. Due date is 1/2/2010. Okay. What is the case up till now? Say this. You have an exporter customer. Let me draw it over here. Okay. Let's keep this part separate because this otherwise you'll face a problem over here by the image. Okay. So let's keep this part and let's draw from here. So what is the case given? On 3/10/2009, your exporter customer has submitted a bill. Bill means what? See here. Always remember one important part over here. Export bill means it's a post-shipment finance. Always remember there are two types of finances. One is pre and second is post. In pre-shipment, always there is an order, either order or LC or LC. In post-shipment, there is always a bill. Okay? Bill. Bill means bill of exchange. So whenever you see the word bill in your problem, remember it's a post-shipment finance. Whenever you see the case of order or LC, you remember it's a pre-shipment finance. So here it's given what? It's a export bill. Now when I say export bill and when I say post-shipment finance, immediately what should strike my mind? What is the percentage of finance given in post-shipment finance? Everyone kindly answer. What is the percentage of finance given in the post-shipment finance? Just answer it right now. Let me see. Post-shipment finance, correct. Post-shipment finance is always given how much? Post-shipment finance is always given 100%, 100%. Okay. So here the post-shipment finance is given 100%. So on 3/10/2009, your customer has submitted this bill of amount is not that important. Drawn 120 days from the date of shipment. Look at this. It is 120 days from the date of shipment. Now, is this the date of shipment? You don't know. Because this customer has come to your branch on 3/10/2010. So if I take this over here, this customer has come to you. Customer has come to you on 3/10/3/10. Let's take in 19. Okay, let's keep it simple. Now 09 is very long back, right? So let's make it 19. Simple. Date is hardly of any importance. This 10 will be 20 then, right? Got it? Clear? So now on 19, 3/10/19, this customer has come to you. And what is the shipment date given? Shipment date is given is 3/10, means same date. Look at this. Luckily, these two dates are same. They can be different also. If they are different, remember this date is of no importance. The day when the customer came to your branch is of no importance. Yeah. The date which is important is always shipment date, when the goods have been shipped. Okay. So here luckily both are same. So the customer has come to you on this date. Now the bill is drawn up to what? 120 days from the date of shipment. So 120 days from here. 120 days. Okay. So count 120 days from here. Now luckily in this problem again, see this due date is given as 1/2/2020. So it's already given. If they don't give you this date, then you'll have to calculate it. Okay, 120 days from here. So in that case you'll have to calculate. Means what? 3/10/2019 to 120 days. So roughly 4 months. Right? So 10 means what? 11, 12, 1 and 2. Right? So 3/2/2010 will be roughly the 120th day. But in between what happens? There are 2 months which are of 3 months, I think so, isn't it? October, November, October and December are of 31 months and January is of 31 months. So 3 days in between, right? Extra days. So these extra days will go back. So it will go back to 1/2/2010. Okay. So this bill will mature on 1/2/2010. 1/2/2010. So this 1/2/2020, let's make it. Okay. 19 it's there, so 20. So on this date the buyer will pay. Remember what I mean by this, the buyer will pay. Buyer will pay. Okay. And what has happened on this date, this customer has come to you. So this date bank will pay. Bank is paying the post shipment finance, will pay. Look at this, right? So bank will pay up to what date? What date should the bank pay? Bank is giving a finance, post finance, right? Post shipment. Post finance, I'll write it. Post shipment finance, right? So bank is giving this post shipment finance. So finance is given up to what days? Will it give up to lifetime from year starting from 3/10/2019 to lifetime? No, it will give up to this gap only, right? This is the only gap for which the bank will finance. Because what do we do in bank? In bank we have need-based finance, right? So whenever there is a requirement of finance, only at that time we finance, right? Others why should we finance? Isn't it? Simple. So now, on 1/2/2010, the buyer is going to pay. Now compute the applicable rate, presuming exchange margin is 0.5%. Look at this. Exchange margin is given as 0.5%. Second, spot rupee is given as 48.1415. Premium spot for January is given as 45.46. Rate to be quoted to the nearest 0.25 paise and rupee amount to be rounded off. Okay. Applicable interest rate is 8.5% for post shipment finance up to 180 days, and commission on the bills purchase is 0.0625 to be charged upfront. So now look at this. This problem is of two parts. Remember on basic, this problem is of two parts. What? One part is of forex, and second part is of INR. Two financings are done over here, forex and INR financing. Up to this part, calculate the rate. Okay. Rate to be quoted, applicable, blah blah blah. Compute the applicable rate. Up to this applicable rate part, over here you can call it, up to this part, all the data relates to forex. After this, D part, everything relates to INR. So you'll have to divide this problem into two parts, right? Clear? Now let's solve this again further. So now first what we'll do, we'll solve this forex part first, and this INR part will be solving second, because INR part is simple. It's just a normal loan and that rate of interest is to be calculated. But forex part is important. How much amount is to be given? What is the rate to be given? That is important. So let's solve that first. Okay. So forex part, we'll solve this forex first. Forex. Okay. What is the forex part? See here, today's date spot rate is what is given. Spot rate for today is given is 48.1415. So which one should I take now? Is this export or import? This is an export client, right? So whenever I am having the export client, export, okay, always use the buy rate, buy. For export, always buy. Got it? And for import, always use the sell. So I'll be using the buy rate. But what is the buy rate now? See this 48.14 and 15. So 14. Let's calculate this. 48.14. 48.14. This is always known as the buy. See here, left side is always buy. Right side is always sell. Always remember this. This side is always buy. And this side is always sell. Okay. So that's why I have taken 48.14 over here. Clear everyone? 48.14. Now what is given? Now should I apply this 48.14 only? Here, when is this 48.14 applied? This rate is applied when I am doing this transaction on this date only. 3/10/2019. If I am doing the transaction on the same date, look at this. I'll write it over here. This is known as a spot rate. Spot is always applied on the same day. Same day. If I have to do the transaction, if this bill was maturing, this buyer was paying on this day only, today only, then I would have applied the TT rate. Clear? Everyone getting this? If the buyer was paying today only, means 3/10/19, then I would have applied this TT rate. But right now what is happening? Buyer will be paying after 3 months, 4 months, right? So this is the risk which I am taking. So whenever I am taking the risk, right, for 4 months I am financing as a bank, right? So whenever I am taking the risk over here, this risk, I will be applying always the bill rate. Bill. Okay. So what is bill rate now? How to calculate the bill rate? So your formula for bill rate is very simple. I'll write it over here. Bill rate equals to spot rate, spot, okay, spot plus or minus here. Now I'll write it premium over here and discount over here. If it is premium, then it is plus. If it is discount, then it is minus. Okay. So what is the plus? What is the case given over here? So this January rate is given as 45.46. Now what is the January rate? January means January end. Always remember this. Whenever any rate is given Jan rate, it means Jan end rate. Jan end. So whatever is at the Jan end, the same will be applied to the February start. Feb start. Okay. Feb start. Okay. So I'll be using what February start rate. So what is the date over here? 1/2/2020. Means what? February start. On first day of every month, I'll be using the same rate which is there for the January end. So February start equals to Jan end. So what is my rate now? Let's calculate the rate over here. See, this rate over here is calculated like this. 48.14 spot plus, now what is this, premium or discount? See this, right side is bigger. When you are in forward market, this right side is bigger. Always remember it's a premium. See here, right big, okay, equals to premium, and left big equals to discount, vice versa. So right now what am I having? Premium. What is this? 45.46. Right side is bigger. So I am having the premium. So whenever I have the premium, I'll have to add it. So always use its premium. Okay. So whenever I am having premium, I'll add it. What will I add it? I'll add the left side only because I am dealing in buy. So whenever I am dealing in buy, I'll use buy everywhere. So here, spot I have used it by 48.14. Here January also I am using it by again 45, right? So I'll be using this only 0.45. Now add this 48.14 plus 0.45. What is the answer? 48.59. Okay. So is this my final answer? This is the rate to be quoted, but is this my final answer? No. Why? Because here, always remember in any forex there are three parts. One is buy or sell, decide whether that. Second is forward rates. So this is forward margin, means apply the forward margin. And third is always the TT margin, TT or the exchange margin. So what is the exchange margin given over here? See here, premium spot is this and exchange margin, look at this, 0.15%. So this exchange margin is given as 0.15%. Now what to do with this exchange margin? In this exchange margin, always remember exchange. I'll write it over here. Some books write it TT also. Exchange equals to TT. Both mean one and the same. Okay. So equals to, what do I do with this? Whenever I am selling, applying the sale rate, selling, I'll always add it. And whenever I am applying the buy rate, buy, I always subtract it, minus. Okay. So now I am doing buy. So then I'll have to do minus. But what minus? I'll have to first calculate it. What is the rate then? See this, margin equals to what is given? 0.15%, right? 0.15%. Percent means upon 100. So it will be 48.59 into 0.15 upon 100. Now some of you might say, sir, why aren't we applying this buy low sell high maxim? You are not using this buy low sell high maxim. So remember, buy low sell high maxim will never be used when the transaction is on the first day of the month or last day of the month. Always remember this. First day or last day, buy low sell high is never used. First day or last day. In between anything is there, then you will be using the buy low sell high. For using the buy low sell high rate, you should always know the two sides of the month. Two sides of the month means, suppose if I have to use the buy low sell high rate, I must know this both the rates, February end and February start. So here February start I am knowing because it's January end, but February end rate is not given. Here, is there any rate given for February end? Right? So February end rate is not given. Here, only January is given. Can you see, anyone can see this February rate? And even though it would have been given, remember, now there is a trick over here. Some books, sometimes in the exam, they will trick you. What will they trick you? They will give you the February rate also. Then what will you do? You will do the buy low, sell high maxi. But remember, as I told you earlier, whenever you are doing any transaction on the first day or last day of the month, never use buy low, sell high. Okay. So what is the rate now? 48.59 into 0.15 upon 100. Calculate it, everyone. What is the answer you are getting? 48.59. Let me see. Let me try it myself also. 48.59 into 0.15% up means what? 0.15 upon 100. Okay. 0.0015. Right. So it becomes 0.072. What are you getting, guys? Are you getting the same? Let me see. Correct. 0.072. If you don't write 2, then also it's okay. So what is my final rate then? My final rate equals to, see here, exchange margin I have to subtract, right? So rate equals to 48.59 minus 0.07. Let's take it this much only. Okay, forget this 2. So it is 48.52. So this is my rate. Now what do you mean by this rate? It means that over here 48.52. This rate means what? This rate means I'll be changing this currency at this rate. Means I'll be multiplying this dollar at this rate, and then I'll be giving the finance to the customer. So now let's solve the INR part. Next thing what will I do is I'll first let me mark it here, because my photo is over here, isn't it? My image. So otherwise it will go behind me. Okay. So now what am I doing? I am converting this INR. What was the dollar amount? Dollar amount was 5 lakhs. Okay. So I am converting this 5 lakhs dollar, 5 lakhs into what is the amount I got? 48.52. So 48.52. Now look at this. Important point is given. There is one point given here. The rate to be quoted to nearest 0.25 paise and rupee amount to be rounded off. See, a rupee amount is to be rounded off and rate is to be quoted to nearest 0.25. 0.25 means what? The meaning of 0.25 is it will be like this: 0.25, 0.5, 0.75, like that. Okay, and last is 1. So what is my rate over here? 48.52. So what is the nearest 48.52 0.25 to this? It is 50, right? So I'll be using 50. And always remember, whenever you are using the buy rate, always round it off to the lowest nearer. See here, you can round it off. Somebody can round this off to 48.5. 2 means 48.75 also, because 75 is also near and 50. 50 is more near, but always remember, whenever you are buying any transaction, buying should always be done through the lowest part. Buy equals to lowest near. This is the rate at which I will be rounding it off, and selling I will be rounding it off to highest near. Okay. So here what will I round it off to? 48.50. So now multiply this, get the answer. 5 lakhs into 48.50. What is the answer you are getting? 5 lakhs. 5 lakhs means 5 zeros. 1, 2, 3, 4, 5, right? Into 48.50. 48.50. So it is 24, 25 and 4 zeros. Means 2 crores. Now crores vagara is very difficult. 24, 25 and 4 zeros. 1, 2, 3, right? 4. Okay. So this 2 crore 42 lakhs 50,000, this is the amount to be given to the client. Okay. Now what happened? This dollar problem ends over here. This is over now. Now you have to focus on INR. Applicable interest rate is 8.5% for post shipment finance up to 180 days. Now what is the amount of days of my finance? 120. So these are within 180. It is given up to means maximum. So I can use the same rate 8.5%. So what will I use it now? See this. This much is the financing I am giving. So what is the rate of interest? Interest I will be calculating. So interest will be interest equals to what? This I'll just write it now 2.42 crores because it is very big. Crores. 2.42 crores into, right? And what is the amount? What is this percentage? 8.5%, right? So 8.5 upon 100. 8.5 upon 100, right? This is my interest. Calculate it again. So what is the amount you are getting? Into 8.5. So into 8.5 means how much? 0.085, right? It is right? 0.085. So it is 2061250. 2061250. So what is the amount? This and this, right? Am I right or wrong? Yeah. 2061250. Right? I think so. Am I making some mistake? 8.5%. Yeah, upon 100, right? Yeah. So 2061250. Yeah. So what is the amount I'll be giving? So it is 20 lakhs and something. So amount which I'll be giving is, okay. Are you getting some different answer? Everyone, just check. Because even I haven't calculated. I am doing it first like this, means with you only. Okay. So what are you getting the answer? Everyone? Are you getting something different? Let me see it from your side also. Yeah. Are you getting the same answer? Let me see. Into 8. Oh, yes. That's what I was thinking. There's some issue over here. Now this 8.5% is for what? It is for 1 year. Now look at this. Very important part. This amount is for 1 year. 1 year. So this is for 1 year. But for how many days am I financing? This 8% is always per annum. I am financing for 120 days. So what will be my interest amount? So actual interest will be 2061250. This is for 1 year into 120 upon 365. Because for 1 year, if this interest is this much, for 365 days, for 120 days, it will be how much? So this I'll have to multiply it with 120 by 365. So it is, let me do it, into 120 upon 365. So now am I getting what? 677671, right? 677671. This is the amount. So this interest comes to 6,77,670. This is the interest. But what is given about the problem? There are two things given. One is the interest up to 180 days and second is commission. Commission is given as what? 0.0625%. So this is to be charged upfront. This is nothing per annum, 120 days, nothing. It is flat. So commission will be 0.0625%. So let's write a commission also. Commission equals to this same amount again, 2.42 crores into 0. What is that? 0.625? Yeah, 0.625. 0.0625, right? This was the commission. Let me say it. Yeah, 0.625 upon 100%, means upon 100. Okay, 100. So what will be the answer now? Do it again. So it is, yeah. It is, yeah. 242. Let me do it myself also. 242. Then what? 5 and 4 zeros. 1, 2, 3, 4. This much is my this amount of finance. Now on this, what am I doing? Commission 0.0625 into 0.0625 upon 100 upon 100 because it is percent. So it will be what? 15,156. Are you getting the same answer? 15,156. Are you getting the same? Now remember always, this interest means I will write it as 1 and this is 2. Both the things. I have to first deduct from the amount to be given to this client. Here I am giving this amount to the client as a post shipment finance. Okay, so because here you are over here, this part, right now we are on this stage. Bank will, out of that I'll be subtracting this interest as well as commission. So first add both these. So total deductible, I'll write it deduct equals to deduct, okay, equals to 1 plus 2. 1 plus 2. What is 1 plus 2 now? 677, 671 plus 15156. Do it. Plus 67, what is that? 677, 671. 677, 671. So it is 692, 827. 692, 827. 692, 827. This much amount is to be deducted. So what does it mean? I'll subtract this amount. So given to the client is given to client equals to 24251234 minus 692827. So what is the answer? Do it everyone. Minus 24251234, right? So it is 23, 55, 71, 72. 23, 55, 71, 72. So this is the amount which I will be giving to the client. This much is the finance, but remember, it doesn't mean this interest is charged on this amount only. See here, interest is charged on the full amount. I am giving the net amount. So this is the amount of finance to the client. So this. The question asks this, applicable rate of interest is this, post shipment finance up to this, everything is given. So you have to calculate the INR amount also. Both the things are there. It's a big case study of 5 marks. And remember, as it is asked in the exam. Okay. So now, everyone subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest updates on JIB and CAIIB. All the updates. Okay. Plus, you will be getting the free YouTube series on all the subjects of JIB and CAIIB. Okay. The same answers I have given. Everyone download Adda 24/7 app on your mobile. In this app, you will be getting the premium study material plus live classes, ebooks, test, everything. So download it right now. Have you liked this case study? Just click the like button, everyone. Okay. Share it with your friends. Whatever is free, share it first. Okay. Everyone. Now further I'll tell you this Sankalpa batch starting on September 4th. Join it fast. You saw this numerical? Such numericals are taken in the classes. Every time I won't be able to take this numerical on YouTube over here. Okay. So join the classes as a fresh batch starting. All the numericals, objective questions, case studies, everything is covered. Okay. All the compulsory subjects are covered. You can join the Mahapack also. In Mahapack you are getting live classes, video courses, e-books, tests, Maha-marathons, mini marathons, practice papers, doubt sessions, everything. How to join this? Okay, let me show you. Go to Adda 24/7. Okay. Adda 24/7, go there and download this app. See here. Yeah. Let me see. There was net problem over here. See this. Let me go to Adda 24/7. Yeah, there was a net issue going on in our area, so it is resolved. So JIB, CAIIB, click on JIB, CAIIB. Okay. Then click on CAIIB November 23. Click on this Sankalpa batch. Done. See this. You will see online live classes, test series, e-books, recorded videos, everything is available. Download it and join it fast. Click on the buy now. In buy now, see this. August 77th code is already applied. 77% off you are getting. So join it immediately. Fresh batch starting. You won't miss anything. Okay. Even recorded videos are available. I'll be back tomorrow with another series. Till then, keep studying and do join the batches ASAP. And we are covering important theory as well as objective questions plus numericals. Okay, for all the chapters of BFM. Today we are in chapter number 6. So let's start the theories here. Today we'll be covering theory and objective questions both. Okay, so let's start. First, foreign equity holder. Okay, one more thing. Have you followed the test, the series yesterday or day before yesterday? Sure. I have covered various topics on the same subject, same this chapter earlier also. On the earlier chapters also. This is chapter number 6. We have covered 5, 4, 3, 2, 1 also. So follow the complete series because it's for you and it's available freely, isn't it? So let's start today. Foreign equity holder. Who is known as a foreign equity holder? These are all the important questions which come in the exam. Okay, they'll directly give you foreign equity holder as per FEMA means. So they'll give you 2, 3 options, and then one of them will be wrong. Then you have to find out whichever is wrong, or they'll give you 2 options, and then they'll ask you both of them, either of them, none of them, something like this. Okay. So that's why you need to be very clear in the concepts. Foreign equity holder means what? It means direct foreign equity holder with minimum 25% direct equity holding in the borrowing entity. Means suppose if there is a borrower, some X person from USA. Person means I'm not talking of person. It can be a company also. That company buys some shares in some Indian company. Okay. Holder with minimum 25% direct equity holder. So if let's say they buy 25% in some bank, so that becomes, if minimum 25%, more than 25% they should buy, then only they are called as foreign equity holder. That is point number A. Point number B is also there. Indirect equity holder with a minimum indirect equity holding of 51%. Okay. So direct, if somebody is buying, then 25%. If indirectly they are buying, indirectly means what? From the open market. So if they are buying it from the open market, it should be minimum 51%. And the third category is also there. Group company with the overseas parent. That is obviously, suppose if I am having 2 companies, let's say in over here, I say HSBC Bank and HSBC Home Loans. Let's say if we have, or Standard Chartered, we are having many divisions. Now many of them have closed. Standard Chartered Bank, Standard Chartered Credit Card, Standard Chartered Home Loans, all were there. But the parent company was one, Standard Chartered. So that is known as a foreign equity holder, group company. So now you got these 3 categories. Number 1, minimum 25% for direct equity, 51 for indirect, and last one is group company with a parent, common parent. Okay, it represents any foreign resident individual, foreign corporate bodies who have invested in the company under automatic or approval route. Now, what is automatic and approval route? Follow yesterday's lecture. I have given the clear discrimination between automatic and RBI approval route. Just to summarize this, automatic and approvals here. In automatic route, the documents are checked by the bank itself. And under approval route, the documents are checked by the RBI. Okay. There are various sectors under which the automatic route is applied or allowed. Various infrastructure sectors are there. Huh? So that's why I say follow this series completely, because all the important points are taken over here. So it can be a health sector, it can be aviation sector, it can be something else also related to infra. So all these sectors free, this foreign equity holding is allowed. Free means in the sense not free. It's under the automatic route. Okay. Person resident in India as per FEMA. This is a definition of under FEMA. So what is the person resident in India? irrespective of his residence in India. Now look at this, irrespective of residence in India in the previous financial year when he has come to India for employment, carrying business or any purpose which indicates his or her intention to stay in India for an uncertain period. Uncertain. Okay. So remember, irrespective of his stay in India. So this is one criteria. There are other two criteria as well for person resident in India. For last financial year, how many days that person should have stayed. For last this 7 financial years, out of them, how many years? This all are in details. These can be taught immediately in half an hour session. So general rule given everywhere is irrespective of the residence period in the previous financial year when the person has an unlimited period. That is number one definition. It also gives the second part in your book. It shall have the same meaning as assigned to them under section 2.5 of FEMA 1999. Now here it defines clearly. Section 2.5 of FEMA says what? Last financial year, how many days this person should have stayed in India. Okay, or last 7 years, out of those last 7 years, how many years this person should have been visiting India or staying in India. So these all are the definitions. Okay. Real estate activities. A real estate activity involving own or leased property for buying, selling and renting of commercial or residential properties or land. So what I mean by real estate, it can involve any of these. Owned, involving owned, leased property for buying, selling and renting of commercial spaces. So suppose if I'm any resident individual or some foreign guy also. If I am dealing in any of these buying, selling or renting of commercial and residential spaces, so then I am in the real estate activity. And also includes activities either on fee or contract basis, assigning real estate agents for intermediating between buying, selling, letting and managing real estate. Now the definition has become wider. Here it was only related to me. I am doing something. I am buying, selling, doing. But even if I am appointing the agent, I am working as a broker, then also that is also considered under real estate activities. Okay. So it includes both. Say this, either I myself doing this or includes activities on fee or contract basis. See this, fee, broker charges a fee or contract basis. Even if I don't charge a fee, contract basis, I have a contract. In that case also assigning real estate agents for intermediating between buying, selling, letting and managing real estate. Okay. So both the things are included. Remember this. Everyone subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest updates. Not only updates, you will be getting it explained from IIBF. What all IIBF says about JIB and CIB. It gives various circulars in between. So all those latest updates are discussed on Adda 24/7 app, Officers Adda 24/7 app. Okay. So updates are there, number one. Number two, you get free YouTube series. Right now, what are you watching? Free YouTube series, right? Free YT. So this free YT series, you get it on Officers Adda 24/7. So whatever is free, grab it fast. Subscribe to the channel, click on the bell icon, click on the like button, share it with your friends. Isn't it? Because here, sharing is caring. Whatever is free, you must share it. Okay. Now let's come to the question time. The credit directly extended by the overseas supplier of goods to the importer is called as what? Buyer's credit, supplier's credit, trade credit or ECB, external commercial borrowing. That is called as what? What do you mean by this overseas supplier extending? See here, this is in case of imports. I'll explain you. See here, my guy, let's say I'm in Bharat. Okay, now we'll call it Bharat, isn't it? The things are changing in India now. Suppose this is Mr. X. Okay, Mr. X is a buyer. See here, Mr. X needs to be the importer over here. Importer for this supplier's credit. And somebody in, let's say, USA, that guy is supplying Mr. Y, that guy is supplying Mr. Mrs. I'm not gender biased. Mr. Y, Mrs. Y, Mr. X, Mrs. X, anything okay. Okay, so Y is supplying this goods, raw material, we'll call it raw. Okay, raw material to X. So what happens in this case? So if Y is supplying X, so X will have to pay to Y. Now if the payment terms are 60 days, 60 days from the receipt of the goods, then why should Y trust this X if X doesn't pay then? So in that case, what happens? Y says that I don't trust you. What you do? You arrange from your bank, let's say SBI. You arrange from your bank over here that they should give me a guarantee. They should sign the bill of exchange, stamp the bill of exchange in addition to you. So you definitely give me the assurance that you will pay. But even in more than that, I want the assurance from your bank. So this SBI gives an assurance to Y that see, you send him the material and on the 60th day, I will pay you. Forget this X. So this is known as the supplier's credit. Okay. So extended by the overseas supplier. See, this is the supplier, right? Supplier. So this guy is the supplier. So this supplier has extended the credit for 60 days and this is a part of working capital, important part. Okay. Next one. The credit arranged by the buyer from a bank, FI, outside India to settle the payment of imports is known as what? Similar question as the earlier one, but slight difference. Masala tadka, right? We have that. What is the difference between dal? What we call dal tadka and dal? Some normal dal is also there, na? Normal dal we'll call it now, isn't it? Yeah. What is the difference between that? That dal, we call it dal something, isn't it? Forget it. So normal dal and dal tadka. What is the difference between them? There is a tadka in this. Same tadka is over here. Same earlier one. Y supplier, X buyer in India. This is from India. Okay, Bharat. Okay.